Joining in on the show is Rakesh Sharma, Executive Director of Bajaj Auto. Thank you so much, Mr. Sharma, for joining in on ET Now. Let's begin by talking about the demand situation. What does it look like going forward in the two-wheeler market as well as domestically and globally?
The demand pattern is very similar to what we have been experiencing in January and February, which is at a retail level, there is weakness still. And we are seeing that in this period, about 10% decline over the same period last year. That is what the industry is facing. This is based on registration data, so this is really from the ground based on Vahan portals. So it shows that the industry is still not completely recovered from pandemic and other issues. At Bajaj Auto, we are still doing slightly better than the industry decline. Globally, there is a good single-digit growth. If I were to make sort of a sweeping statement about the emerging markets where we have our footprint, Africa, Latin America, Middle East, South Asia, with the exception of Sri Lanka, are all back and on a growth trajectory. ASEAN has been slow to recover. We have a significant presence in places like Philippines and Cambodia. So they are still not fully recovered from a demand point of view after the pandemic. But overall, global markets, the retail demand is in single-digit positives.
Okay, and I'd understand that the chip shortage would be a bit of a setback for companies such as yours. What has been the impact of the same, and are you expecting a production loss in this quarter owing to it?
Yes, that is actually the main concern and preoccupation of the management effort right now. We are facing a big shortfall. Almost 30% of our production is impaired because of the shortages in availability of semiconductors to our vendors, and therefore some of the components we are not getting. And we do not see this resolving very quickly. So it is just a wait and watch and trying to sort of mitigate this by developing alternate sources and, being really pushing and being on the alert and trying to organize things almost on a weekly basis.
But why is demand not coming back in line with other sectoral trends? If I look at the slowdown which happened because of COVID, a lot of sectors have recovered. But it's not only two-wheelers, auto industry in general has not recovered. Is it largely more a demand issue?
See, it is important to look at sectors very specifically. And two-wheelers is very, very different from auto, which is generally used to label four-wheelers. 70% of our customers earn less than 30,000 rupees per month. And almost 80% have no income proof when it comes to retail financing. So that's the segment of the customers which we are talking about. And this is the segment of the customers which has been sort of hardest hit from the pandemic and still not recovered. And that is reflecting in their undertaking new purchases of two-wheelers. So this is a very, very different consumer segment from the one which buys cars.
So if one works with an assumption that this will be a normal year where rural demand will come back, the commuting, which in a sense got impacted in 2021 because of stop and start, first wave, second wave, third wave, how much of that normalization will translate into real demand? Because when we speak to auto companies, they are saying that, look, don't blame us, blame it on the COVID, and the normalization has not happened.
Well, I would say since the last 3 or 4 months, we are rapidly gone back to normalization. People have accepted whatever the soft third wave disruptions caused by the soft third wave have been accepted and incorporated into the everyday life of people. So I would say from a pandemic point, and the vaccination program has been very, very successful in creating reassurances. So I would say the normalization has set in. What we are experiencing in the retail demand is not only pandemic related. There seems to be a structural issue as far as two wheelers is concerned, because almost every region of the country is declining. Almost every sub segment, which is entry level 100cc segments, 125cc segment, the sporty 150cc segment, all these are declining. Some a little bit more, some a little bit less, but nevertheless, all are declining. So this kind of a pattern indicates that it is an industry-wide issue, and it had sort of set in even before the pandemic. If you go back into the history, you will see that the demand had become soft after the BS6-led price increases, the ABS-led price increases in the 150cc plus segment, and even before that, the insurance and the those kind of cost increases had led to a softening of retail demand. And the pandemic has actually delayed the economic recovery and weakened further the consumer sentiment as well as the purchasing power. And that is what we are saying. So I would not like to say that this is all almost entirely related to the pandemic, and now the pandemic receding, demand will come rushing back. We are not seeing that happen. It may still happen because as the economy recovers, there will probably be a trickle down impact to the lower consumer segments, which is where two-wheeler customers reside. And we may see that happen. We will see the retail financing aided by the fintech ecosystem penetrating that segment more and more, and that will be very helpful. And like you say, if the sort of purchase of rural crops gets going, then we will see some lubrication in that segment of the economy, and all that will hopefully combine to lift the demand in the coming months.
Couple of years back, there was a time when Mr. Bajaj used to mention that we do not want to be the number one player in the two-wheeler market, but we certainly aspire to be the most profitable player. So your margins were highest. Then there was a time when he said, look, I need to protect my margins. A lot is changing, but I also need to be cognizant that I'm losing market share. So you compromised on the margin. What is going to be the stated policy now? Because this time margins are coming under pressure because of high commodity prices, electric vehicles. What would be the focus for this year and next year? Retain market share at low margins, or bring margins back and don't care about market share?
So you see, there is never a binary method of working. You have to balance it. But I think it is the same broad approach which we have always followed. We have been focused both on the top line and bottom line, and it's not, we don't need to swing one way or the other. But yes, at Bajaj Auto, we do feel that it is important to have best-in-class profitability because that signifies many things. It signifies strength of brand, it signifies productivity, efficiency, and it also gives strength to face the ups and downs of business cycles, not just in India, but also internationally. So while we retain best-in-class profitability, we will continue to thrust and improve our market share through improving the market shares in the profitable or the higher end segments of the industry, which are generally 125cc and 150cc plus segments.
Rakesh, but I'm guessing it must be a very tricky scenario for you right now to try and combat inflation and the kind of commodity escalation that we've seen on one hand, and at the same time, at a time when there is a demand slowdown, be extremely conscious of how much price to actually pass on to the consumer.
Yes, you're absolutely right, because these are the times when the consumer is less adventurous, and we have to be very careful that whatever little demand is coming back. I mean, the declining growth rates are reducing. So it was -15, now it is -10, -8. So we should not impair this recovery. So we have to be very careful about passing on price increases, even though sometimes the cost increases are such that the companies are left with no other option. We also look at what competition is doing, obviously, because it's a highly competitive and price sensitive market. So balancing competition and balancing the price sensitivity of demand is a tricky subject.
Sure, it is. Rakesh, I know, I mean, it's all interlinked and it's a bit of a domino effect, but what's the bigger concern right now? The disruption which is happening in the EV segment? Or is it, continuing to be chip shortage and the commodity inflation? What's a bigger worry for you right now?
Well, one is an opportunity and the other is a disruption. So really the only disruption, and it is a very big and serious one, it is not just about the shortage, but it's about the whole uncertainty which is surrounding. It is about the lack of visibility in the supply chain, which really makes planning very, very difficult. And of course, there is a cost implication to it also. So I would say that the semiconductor issue is perhaps the single largest agenda on the management meetings. As regards EV is concerned, frankly speaking, I would say it's a positive disruption, because it is bringing for us at Bajaj Auto at least a splendid opportunity. The EV transition is first unfolding in scooters, and as you know, that we have had a very singular focus on motorcycles. But with EV two-wheelers, now this opens up a vast new segment for Bajaj Auto, not just in India, which is a very, very large scooter market, but also internationally. For example, in ASEAN, which is a very large non-motorcycle two-wheeler market, and we have been handicapped over there, as you know. Over 50% of our sales comes from international markets, but our presence in countries like Thailand and Indonesia is small, because the non-motorcycle two-wheelers are almost 90% of the market. Now, when this market changes to electric, and with our own sort of plans for electric, this opens up a very big opportunity for Bajaj Auto in regions like ASEAN. So I would say combined ASEAN and India, this actually is a very big positive disruption, as you're calling it.
That you applied for the Auto PLI scheme. How much investment do you plan to make under this? Can you share more details?
Yes, we have, of course, applied, and we have got the approvals. I think it is a splendid scheme, not just because it is incentivizing the corporates to work on this transition, but I think it sort of signals a very strong government level commitment to making this transition happen, which is very reassuring, because these transitions will not unfold in 1 or 2 years. These are going to take a decade to play out, and in some way the government is providing a bridge over the uncertain period, which is the immediate period. Once the industry starts to really transition, the later years will probably have far more certainty and equilibrium, but it's a beginning part of the transition phase, which is always uncertain. So this is where a government signaling very strongly through the PLI that they are behind this transition is very helpful. It also sends out a very good signal to international vendors, because they also start to see that India is definitely going to move the EV way. And to that extent, India sort of ratchets up in the priority table, because, again, supply chain is going to be a very, very key area of management, and there'll be a lot of competing requirements from all over the world, from big corporations in four-wheelers, etc. So it's very helpful to be regarded as a priority country, hopefully, in the priority table of these big vendors. So I would say that the PLI scheme has got multiple benefits, and therefore we are very, very excited about it. We are investing about 600 crores or so in not just the new plant, which is coming up in Akurdi, and hopefully the first vehicles will start rolling out in June itself. But just across the road from the plant is we have an R&D center, and a large part of that R&D center is going to be devoted to EV. So in combination, the R&D center, the EV R&D center, and the EV manufacturing plant should be a very world-class electric two-wheeler center for Bajaj Auto.
Well, today to talk about the dynamics within the entire cement industry, we have with us Mr. N. Srinivasan from India Cement joining in, and who better than him really to throw light on what's going on with the cement pack and of course with India Cement as well in particular. I recalled in our last interaction you had talked about as to how demand has begun to improve in the southern parts of the country, and which you said is going to likely to continue up until June 2022. Help us understand what is the current demand scenario on ground, and whether you're seeing a continuation of that trend which you earlier highlighted.
The fact that we had these lockdowns, once the lockdowns have been lifted, the demand has bounced back. In fact, I would say that the demand is today as brisk as it was before. On top of it, we have a lot of infrastructure spending by the government in South India, in the southern part of India. So I think in this region, I mean, as far as the west, north and east are concerned, demand is very good as it is. So I think we are heading to a period over the next year which will see a much better demand than before.
Given the ongoing conflict between Russia and Ukraine, we've all seen what's happened to commodity prices, and the heat from that is being felt across the board. Tell us, how is it that you're getting impacted? Because coal prices have inched up. We've already seen what's happened to crude, hitting 130, now cooling off to 100, which as it is a very elevated level. How are you coping up with the hit that's coming in from commodity inflation?
You see, the commodity prices, the price of coal started to go up even before the war. If you notice, even before the war, the prices had gone up.
Yeah.
We have no choice. The producer has no choice except to increase the price of cement and hope that he can sell at that price, because the increase is quite sharp, quite steep. So I will increase the price of cement. On 1st April, I will increase the price of cement, because all coal prices have gone. Not only that, see, there are two aspects. One is availability, second is price at which it is available. So today, availability may be possible, but cost is very high.
Strong and buoyant right now that the price hikes will be absorbed easily?
I think so, you see, because every cement company in India will go through a very substantial cost increase. So I expect if everybody will increase price. I don't think that you can be smart in this, trying to say that I will undercut. No, because the increase in cost is so massive.
Given the product portfolio that you just talked about and the specific expansion that you're looking at, Would this also entail putting up further capacities, expanding capacities? Is that also on the anvil?
No, the products that we have launched today can be produced at every one of our plants. I don't need additional capacity. As it is, I've already said that we are operating at about 60% capacity. Let me go to 100%. We will, after that, we will expand. We have plans for that. But it doesn't make sense to expand when your overall capacity utilization is only 60%.
Fair point. Mr. Srinivasan, India is the second largest producer of cement, and if my numbers are right, we're producing about almost 450 million tons of cement every year. You clearly have a very large share of this pie. I wanted to understand sectorally, or rather segmentally and geographically, which are the regions which are performing well and which are the ones which are still need more attention, or where you see that demand is still a little bit tepid.
I often talk of India as 5 Indias where cement is concerned. Today, the West, the limestone, they just have about enough limestone to produce cement. They are importing some limestone also. The North, there are no more new sites to develop new cement factories. The same is the case with the central zone. The East does not have any integrated plant. I mean, mostly it is grinding units. It is only in South India that 40% of India's limestone is. So going forward, I envisage some kind of a mechanism to transport cement from the south to the north to meet the needs of the developing India.
Sure. Mr. Srinivasan, great that you could take time out from your product launch. Good to have you on the show today.